I was wondering if we could start and maybe just ask you, how do you look at the stock market? So many people look at the stock market, they're confused, they're scared, they see the headlines, they see the crashes, and they don't even know how to understand it. They don't know if they should have part of their portfolio in stocks. This is something you've looked at for, over 20 years. How do you start explaining this to people who aren't educated? And how do you look at it? How has that changed over time?
Yeah. Well, I started out, I just had a general business background, went to Harvard and Harvard Business School, learned about businesses, but my parents were teachers. They met and married in the Peace Corps. And so I didn't grow up sitting around the dinner table talking about stocks or finance or investments. That wasn't, my parents didn't, I'm trying to think, the first 50 years of their lives, I don't think they owned a single stock. Only when I started getting into the business did they actually, start learning anything about it. So I came to it late. I was always interested in business, and I was very lucky. I was college buddies with Bill Ackman of Pershing Square, one of the best known, largest investors in the world. And he introduced me to Warren Buffett. When I first started getting into investing, this was after college, even after business school. And he said, go read everything Warren Buffett's ever written, and that's all you need to know. You can stop right there. That's all you need to know about investing. And I would still generally echo that advice. You can just type into your browser, Warren Buffett annual letters or shareholder letters, and that's a pretty good place to start. So,
what is his philosophy, if you had to describe it? If I read 10 of those letters,
sure.
What do I see? A guy that's a long-term investor, a value investor,
yeah,
who doesn't get caught up with bells and whistles and trends?
Well, interestingly, he had a transition in his life. He was trained by sort of the godfather of value investing, Benjamin Graham. He studied at Columbia Business School under Benjamin Graham. And he was more of what's called a cigar butt investor in his early career, where he just bought statistically cheap stocks, trading at a discount to their liquidation value. He would buy stocks trading at 2 times earnings, and then they'd trade up 50% and be trading at 3 times earnings, and he'd flip them and buy another stock at 2 times earnings. So he didn't care about business quality, management, anything.
Okay. Why cigar butt? What does that mean? Because you're going to put that thing out?
The idea is if you're a real cheapskate and you don't want to buy a new cigar, if you search around, you can find a cigar butt on the ground that someone else has smoked and discarded, and pick it up and get one last puff. Now, it's not very satisfying, but it's free. You got something for nothing. So look, the two principal concepts of value investing that Warren Buffett has always preached are Chapter 8 and Chapter 20 of The Intelligent Investor, Ben Graham's classic book on investing. And the concepts are intrinsic value, which is what is something really worth, not trading stocks or whatever, but thinking of what is the value of a company, which is a function of its future free cash flows discounted to the present. And then margin of safety, which is stock market's pretty efficient. And it's forward looking. And there are lots of smart people out there. So most stocks are fully valued. They don't represent a good bargain. You're paying $1 for $1, if not $1.20 for $1, these days when you're 11 years into a bull market. So intrinsic value, figuring out what something's really worth, and then margin of safety, buying something at a substantial discount to its intrinsic value. Those are the two key pillars of investing. It's very simple in concept, difficult in practice. Both those things are difficult in practice. Figuring out intrinsic value means you need to be a good forecaster of the future of a business and what its cash flows will generate. Once you know that, it's easy to value, but figuring out the future is always difficult. And then the second part is difficult emotionally, which is, you want to make money quick, the stock's really moving, there's excitement, and so being patient and disciplined and waiting for the occasional situation, because it doesn't happen very often, when you can buy at a big discount, when there's a big margin of safety. So investing is super interesting. One of the reasons I love it is because of the challenge, both the intellectual challenge and the emotional challenge, which is equally important.
Hi, my name is Brian Rose, and I've just wrapped filming of an exclusive video with Whitney Tilson, the American investor, author, and founder of Empire Financial Research, about some exciting investment opportunities in the electric vehicle and autonomous driving space.
When revolutionary new technologies come along, they follow an S-curve like that. And I think we're in the very early, right about to hit that inflection point with both electric and autonomous vehicles in a way that, I could see in 10 years where more than half of all the cars sold will be both electric and pretty much self-driving, if not full level 5, certainly level 4.
Whitney has been called the prophet by CNBC because of his uncanny ability to predict the future with his investment advice. And our video will not be available on YouTube or anywhere else but the link below.
It's an incredibly exciting area, and I don't think people fully appreciate how quickly it's going to happen.
Look, we've all seen the massive moves in Tesla stock recently, and yet most of us missed it. But Whitney has 5 special investment ideas that the general public have never heard of that will allow you to take advantage of this once-in-a-lifetime opportunity in the electric vehicle and autonomous driving space.
Think of the implications for auto insurance if computers are driving cars. Hopefully, almost 40,000 Americans die every year on the roads, and many, many more injured.
The truth is, this sector is going to change everything, from energy to automotive to insurance, even saving hundreds of thousands of lives due to car accidents every single year. And because you are a London Real viewer, I've managed to get you free access to his groundbreaking special investment report through the link below.
We're rushing to finish our research and write it up and get it out because all the publicity with Tesla stock ripping is drawing attention to the whole sector, and we want to get our report out quickly so that our readers and subscribers can take advantage of some of the other stocks that investors haven't yet picked up on and haven't yet tripled, but we think have that kind of potential.
Whitney says that we should expect exponential growth in this sector, much like we saw with the introduction of the iPhone in 2007. Imagine being an investor in Apple back then. How much would you have made? So click on the link below or go to londonreal.tv/invest to watch our video and download your copy of this free report. Unfortunately, I've been limited to the number of people who can have access, so act now and get your free copy to take advantage of this incredible investment opportunity.